I said that SPY, we had a trend chart. We had a trend chart target around 620 by EOM. EOM stands for end of the month. Okay. Now, I also show there's been some cautionary movement between 569 and 582 and bearish below 569. So what has happened this week is we've got a lot of the same thing. We created some consolidation here around that 606 area. That was literally where we were last week. Now, what is going to propel us either up or down into the end of the year? There is a report. There is a meeting that is coming out on Wednesday. And that meeting might be the catalyst that we're looking for the markets to move higher into year's end. So when you look at S&P at 606, and you see that so far for the last month, I mean, literally the last 30 days, we've moved from the high fives back up to the low sixes, and I'm looking for about 2 to 2.5% movement between now and the end of the year. I think that is actually very doable, right? 25 points between now and year's end. I think that could come in a matter of a couple of days, but we need a catalyst to jumpstart it. I think the FOMC meeting is going to be that catalyst. Let's talk about bonds and the FOMC meeting. They're caught in the one-year range. Recently, I threw this chart out there that showed that the Fed is really, this chart's got the Fed guessing. Are we cutting rates more? Are we holding fast? And more importantly, what is the comments, all right? Or what are the comments, future comments, that are going to come out of the Fed that will make traders guess whether or not rates will continue to go down, sideways, or will we firm up? Here's what's happened going into today. Over the last week, we've pulled back from 95 down to 90 in anticipation of the meeting on the 18th. It is definitely keeping this pattern in check. And this, by the way, the dotted lines you see there on the screen, all right, here's the high, here's the low. That's been the high and the low for the entire year. And we have not broken out. We've not broken below 87.50. We've not broken above 102.50. This is the Goldilocks area right here. We go down below 87.50 and bond yields are going up, which I don't think is a good thing for stocks. Let me show you one more thing that might suggest this is going to happen. And that is the double dollar index. Double dollar index coming into the beginning of December was just coming off of highs of 30. And there were a lot of folks saying, oh, this is a big jump up. There's going to be a pullback. It's more an after effect of the Trump administration and the dollar above getting strength against all the other currencies, et cetera, et cetera. Look at what happened as of today. We're still up there. In fact, we're above 30 now. And we're in more of an institutional move higher. So there's a lot of big money going into the US dollar. Potentially bad for stocks if this continues into the holiday season. All right, oil. Beginning in December, we were talking about oil coming into a consolidation area. Bullish above 79, bearish below 66. That was the wide ends. But looking for getting to 79 or getting to 66 meant we had to break out of this triangle that's happened here. Look what's happened in the last couple days. The breakout of the triangle has begun. I like this up into the upside into the Christmas holiday, right? I like this as a holiday buy, but a short-term holiday buy. Gold continues to outshine. We talked about this at the beginning of December, that we were around 246. We are bullish above 238. We're neutral 218 to 238, and we're bearish below 218. I want to show you something that's happened this week. Gold has, again, above 250, back down again. To me, 238 is the fault line for this earthquake. If we really are going to move from gold to digital gold, then money will inflow into digital gold and it will outflow from gold and GLD. So what is digital gold? Digital gold is this, Bitcoin. And coming into the beginning of December, we talked about Bitcoin really having trouble between that it hit 104 last week, pulled back to 92, 93, and has been stuck in this range, having a hard time getting above 100. It did jump above 100 late last week, and it stayed in that 102, 100 to 102 area all through until last night. And last night we jumped up above 102, 103, 104. Where are we at right now? We were at 107 not that long ago. And I mean, we're talking about, 107 new highs. I have updated targets. My target's always been around 105, 109 by the end of the year. I recently updated those, and I've got 109 as a base, and I've got 127 as a year-end target. Now, why is Bitcoin moving higher? Mainly two things that have happened this weekend. Number one, we've got MicroStrategy that just got added to the QQQ. That rebalances the Qs, and there's some buying going on with MicroStrategy, at least off the open. The other thing that's happened is there's some rumors that have been floating around. Now, we've been hearing talk about Bitcoin, creating a Bitcoin strategic reserve after January 21st or January 20th. But now there's some rumors popping up this weekend that this could possibly happen on day one of the administration, because apparently the president has the ability to help facilitate strength in the dollar. And he can do it with the stroke of a pen. And that's a lot of what's also happening with Bitcoin. There's been some rotation coming out of meme coins and moving into Bitcoin itself. So there's a possibility as well that all three of these things are causing Bitcoin to make a serious run into and through all-time highs.